later. Thank you. Ifatu, over to you.
Okay. So can I have the slides, please? Whilst we're waiting for the slides, I can just dive in. So the average entrepreneur doesn't really like to hear anything concerning tax because it sounds like a burden. It sounds so technical, but it really doesn't have to be. Tax is a compulsory payment required by the government. It's a way of generating revenue. You can't opt out of it. It's compulsory. The rate is fixed, and you can't ask for accounts on how the taxes you paid have been deployed. In the words of Celine Dion, rain tax, it's inevitable. So what better way to be prepared for it than to plan with professionals? So you first need to know who will be collecting different heads of taxes. Generally, if you're an individual living in the FCT, Nigeria, or a company, a registered company, an incorporated company, generally you'll be paying tax to the FIRS, the Federal Inland Revenue Service. But as an individual or a sole proprietor or a business name or a partner in a partnership, generally you'll be paying taxes to the State Inland Revenue Service or the state where you reside or carry on business. So I think we're now on the fourth slide. So in planning your business venture or structure organization, it's important to understand what the effect of the business structure will be on the taxes you would have to pay. For instance, if you're incorporating a company, you should know straight off the bat that you'll be paying company's income tax, and it would the amount of taxes you would pay or the percentage of income tax you pay depends on the size of the company. This is a new innovation by virtue of the Finance Act 2020. It's one of the initiatives the government introduced towards ease of doing business in Nigeria and to boost the economy, particularly at the SMEs level. So for small companies turning over 25 million or less, they're exempt from tax liability. However, if it's a medium-sized company with gross turnover of 25 million to 100 million, the tax rate is 20%, whereas for larger companies with over 100 million turnover, it's the usual rate of 30% tax on chargeable income. Then, so if you realize that the kind of business you're setting up would not really require you to deal with government agencies, you don't need to attain certain level of corporate governance before you carry on your business. There really isn't, there may not be a need to incorporate a company and then be burdened with the level of taxes and compliance required of incorporated companies, because incorporated companies also need to pay 2%, excuse me, 2% education tax on the profits of the company. Now, for taxes applicable to entrepreneurs, there are various heads of taxes you will be concerned with. There's personal income tax, companies tax where applicable, value added tax, withholding tax, etc. But I'm going to stick to the major ones, which are income tax and then the VAT and withholding tax returns. So for personal income tax, you need to, if you have employees, you would be concerned about properly computing and deducting and remitting the various employees' income tax. There's a schedule, a schedule for calculation of each employee's income tax. It's a graduated rate from 7% on the first 300,000 to 24% on an excess of 3.2 million and above. If you're a sole proprietor or a partnership, you would compute your own separately and then also compute that of your employees' personal income tax. But if it's a company, besides the company's income tax, you would also have to compute and deduct and remit personal income taxes of your employees. And you need to first register with the State Inland Revenue Service for payee purposes, pay as you earn. And I've noted down when that should be paid. By the 31st of every year, you file the returns. However, each month you pay that of the month before. Next slide. Value-added tax is a form of tax levied on consumption of goods and services. However, basic necessities such as food, medicine, children's items, education are goods and services exempt from value-added tax. It is borne by the final consumer, not the business owner. However, it's the business owner who has the responsibility to charge, deduct, and remit to the government. However, the Finance Act 2020, in a bid to support small businesses and reduce the level of burden on small businesses, so to speak, has exempted companies with a turnover of less than 25 million from having to deduct and remit VAT. A company is obliged to register with the FIRS to collect VAT and then render monthly returns, failing which there will be penalties and interest on penalties, depending on how long the default persists. On withholding tax, it's not actually a form of tax. It's more like a mechanism the government has devised to collect tax in advance. This is to ensure that the tax net is wide and as many people as possible are brought into the books, so to speak, so that they are recorded as taxpayers. And then it also eases the burden of collection of taxes. So if you do business with, say, a government agency and your fees seem to be deducted, it's not quite a round figure which you agreed. It's before you start raising dust and all that, just check the percentage. You might realize that it's actually a deduction of your withholding tax. I'm actually on the withholding taxes slide. Hello, Stephanie. Thank you. So when you notice something like that, no worries. Just take note to ensure you obtain a receipt showing that you have paid this amount of tax in advance. It will go a long way to deducting or reducing your tax liability when it's time to pay. So make sure that you deduct withholding taxes from your landlord, consultants and advisors who you do business with. Next slide, please. Some other innovations to the Finance Act 2020 is the requirement for the tax identification number. It's compulsory. Every business has to have one. When you register these days at the CAC, you obtain one, but you still need to register at the tax office nearest you to get a tax identification number. Some banks will not transact with you, and that's the requirement of the law, except you have a TIN. Also, another innovation, this was in a bid to bring as many taxpayers under the tax net. And now companies operating online are no longer totally exempt or invisible to the taxman. You are required to pay your taxes. And then as well, VAT on non-resident tech companies. Foreign companies operating online with Nigerians or Nigerian businesses are obliged to pay tax. However, it's the Nigerian here or the Nigerian company who is obliged to deduct and remit the tax to the FIRS. Now, having paid all the taxes and all the taxes you are obliged to pay, it is important to get your tax clearance certificate. The tax clearance certificate is the tax authority's confirmation that the taxpayer has paid off his taxes and there are no outstanding liabilities for 3 years prior to the tax year in question. There's a process to obtaining the tax clearance certificate for a company. You need your certificate of incorporation, memorandum and articles of association, particulars of the directors, and notes clearance certificates of a director of the company. However, if it's a new company who has just commenced business, but you need the tax clearance certificate for some official purpose, no worries, there's a statement of affairs to show that you haven't commenced business, and you support that with your business. And then you would be required to pay a pre-operational levy. Next slide, please. I'm running through the slides because I really wouldn't want to miss anything before the time is up. There are many benefits to obtaining your tax clearance certificate, which, as I said, you cannot obtain if you are in arrears of taxes. You can get, it paves the way when you need for import or export license, depending on what business you're in, application for certificates of occupancy, land allocation, real property transfer, if that's the kind of business you're in, or you want to own or transfer your business property, for building approvals, vehicle registration and ownership of vehicle, agent license, trading license, pools and gaming, particularly for businesses in the sports sector, application for registration as a contractor or a distributorship. Next slide. These are but a few of the benefits of having I only streamlined it to the ones that I thought would be relevant to today's audience. There are many other benefits. Excuse me, so sorry. There are many other benefits, including obtaining license to carry a firearm, but I didn't think it was necessary for the purpose of this webinar. It's fine. It doesn't, you don't need to employ somebody if you can't afford it, but definitely you should be able to afford to get someone to periodically look at your books to be sure that all is in order, and then audits. An audit is quite necessary, particularly for a company in computing the financial statements and then computing the tax. Keeping proper records of tax documents and correspondence with the tax authorities If you need to ask for, if you need to object to a tax liability assessment, which you really should not allow to happen. If you compute your taxes properly and remit on time, you may avoid that. However, the fact that a tax authority has written you and is requesting to do an audit or something like that doesn't necessarily mean they have discovered something wrong. It could well be random. Sometimes the tax authority is authorized to randomly audit companies. However, if your books are tidy, you may not have anything to fear. You also need to take into cognizance the analysis of your financing structure and the management of your debt equity ratio. The mode of assets acquisition, are you buying in cash or hire purchase or leasing? Timing of acquisition and disposal of fixed assets, timing of capital allowance claims. These mostly relate to companies, and I'm aware that quite a few entrepreneurs, they may need to incorporate companies as a matter of necessity. You make sure you properly compute and deduct your paying. If you need a schedule or a timetable for that, or reminders, there are so many electronic aids, set reminders for these things. You can actually automate if you decide to. And these days, it's not so difficult. Some of these things can be done online or by yourself if you have a fair idea. However, it's always recommended that you engage a professional. So like I said, engage a professional. Tax is quite technical. I wouldn't kid you on that. However, if everything is in order, you don't really have much to fear. And like I noted, there are so many benefits to having your taxes in order and getting your tax clearance certificate. So an effective tax strategy is best advised by engaging the services of a tax practitioner who may also be a lawyer like me to render advice specifically to address the business's unique needs. So if you have a professional advising you, you have nothing to worry about. But if you choose to do it yourself, just know that you're in for a lot. It's not so straightforward or easy, and you are likely to miss something which you do not want to happen, because I would presume that an entrepreneur would rather focus on the business venture itself rather than the technical aspects. So I don't know if I mentioned that in as much as there are benefits to paying your taxes in time, computing, deducting, and all that, when there is a slip, like you do not pay in time or you do not pay the correct amount, the tax authority is empowered to charge penalties. And if the default persists for a long time, interest tax liability. So it's important to have a strategy and stick to it and engage a professional. Thank you.